get triggered. Yeah.
Wow.
Yeah, so that puts it up over its 0.5 percentage point threshold.
I think the US economy is slowing faster and in a broader sense than most people anticipated, including the Fed.
He should have cut last time, and the honeymoon is over. Let's put it that way.
I mean, 4.3%. Right? This is not, so whether we are at that moment of a recession or not, this is your build into substantial weakening in the labor market.
Mortgage rates are tanking, stocks are down, and the recession narrative went full on Friday. And there is a Nashville heavyweight, very well known in Nashville, cashing out on his $10 million condo. Any guesses who it might be? I'm gonna tell you. Now, as mortgage rates tank, you might be surprised that demand actually drops with it. 2 weeks ago here in Nashville, it was flat compared to last year. Now it's down almost 6%. And when you think about it, the economy's healthy, it's just consumers stepping back while it gets cheaper every day. However, if we are truly in a recession, then the drop in demand could continue along with price declines as sellers increasingly sell into less demand. And I got to tell you, coming into this weekend, it's time to make some aggressive offers if you are a buyer. Price cuts are at 38% of active listings. Last year, it was only 36%. And keep in mind, active listings are up 40% year over year. 38% of a 40% larger number. We have a heck of a lot more price cuts this year. And while prices have cooled, it's not really showing in the monthly data yet. In fact, I forecasted Nashville home prices to be $490 to $495 in July. Right now, the numbers aren't complete yet, but right now we're sitting at $499. Now, one thing to note, I think this is interesting. The median contract price coming into July was right at $500,000. And the median list price of what's closing is $510,000. So that means anything that hasn't closed is closing in August, and we could see an absolutely massive downturn in terms of price in August. But look, everything in August is already under contract. And based on those contracts, it's very likely we'll see prices in the 480s. Why? Well, because if the median contract price is in the mid or lower 490s, and we're getting another $10,000 gap between what is closing and what the list price of what is closing is, it's very obvious that would put us right in the low to mid 480s, which puts us very close to where we were last year at 478. And then we have what's currently going under contract. And I suspect that the concessions and price cuts are going to continue to increase. Now, only time's going to tell. And the truth is, it's the people buying now that are going to show up 2 months from now when the closings get reported. Keep in mind, anything that goes under contract, it's August 3rd. Anything that goes under contract today is likely closing in September. It won't be until October before we actually see those prices. This is why I focus on leading indicators like price cuts and contract price, both of which are suggesting prices are heading down. Now, certainly mortgage rate relief is happening right now. And I'm not going to completely dismiss the possibility that it could stoke demand. There are still a lot of people moving to Tennessee, and we are already running historically low close volume, historically low demand, which means rate relief, when it stabilizes to a new lower range, wherever this lower range might be. I mean, I've had people tell me it's going to go down another %. That would put mortgage rates well into the fives. But I would be watching for this, stoking demand. It's possible. Now, someone did point out to me that real estate can do pretty well in recessions. And it's possible, right? I mean, I don't know the future. However, the Fed called out real estate prices unhinging from fundamentals in Q3 of 2021. Okay, and the big question has always been, would we get a recession that would push asset prices back towards fundamentals? Now, there are so many people on the sidelines waiting for prices to make sense. How do I know this? Well, if we go back and look at the greater Nashville area, we can see that pre-pandemic, we were closing between 35 and 40,000 houses, single-family homes, every single year. That number is now well below 30, somewhere between 26 and 28,000. That's 8,000 houses conservatively that want to buy a home that haven't, and it's accumulating. I do have a nagging question. Why are all these people cashing out? Jamie Dimon, Warren Buffett, they're all cashing up as CEO after CEO is selling into these really high stock prices. And you have to ask, why? And now it's Tony Giarratana. He's selling his $10 million penthouse condo, 515. This will be, from what I can tell, the most expensive condo to ever sell in Nashville, besides the $15 million penthouse that sold at the Four Seasons last month. This is wild. Okay, now he's listed his 515 condo coming with exclusive owner amenities. And I'm going to be honest, this thing looks awesome. And I would totally live there, but they just had a fire in that building. And I think I would probably be claustrophobic. And I also think it would give me vertigo because every time I would look out that window, it sways in there, guys. I mean, this building's so tall, I think it sways. I've actually never been in there, but from what I hear, it sways. Anyways, I remember taking a buyer to a Four Seasons, and it was beautiful. I mean, it was beautiful. The view was insane, but I get vertigo just thinking about it, if I'm being honest. It was high up. And look, I love heights and I love big buildings, but some of these buildings, when they sway, that's just not my thing, okay? Now, the crazy part about Tony selling this, and look, I don't know why he's selling. It didn't say why he's selling on there. Certainly, we can all speculate. And by the way, Alcove and Prime, he helped develop those. I don't know what ownership stake he has in those. It's just an LLC. But Alcove and Prime have a $180 million construction loan. Okay, just do the math. What's 6.5% on $180 million? I'll give you a hint. It's like $10-12 million. $12 million just in interest. They're only half filled. There's only about 350 units filled. But guys, they have a $180 million loan. At 6%, that's $10 million in interest. So I don't know where their construction loan's at, but if it's at 6%, which is like a really good rate, keep in mind, construction's done. You know, do they have to refi up to a new rate? That's 10. They're bleeding $4 or $5 million in cash for the Alcove and Prime, which is nuts because he just got a $280 million loan for a new building. So I'm sure he's fine, but you wonder why he's selling his condo, you know? But look, if you watch this channel at all, you know I'm extraordinarily concerned about the national debt and deficit spending. Now, I believe while this may be some relief, and it may get significant from here, right? I mean, mortgage rates have dropped almost 1% in just a few weeks, really. I mean, it's a lot. But I'll tell you on the other side of this, and I'm convicted about this until we get our national debt and deficit in order. We are heading for more inflation and higher rates than we saw before on the other side of whatever this is. Okay, so who knows? You really don't have to. Because the truth is if you just follow Warren Buffett, the Oracle of Omaha's advice to begin with, I think you'll be just fine.
You should spend a little bit less than you earn.
And with that, I hope you guys have a great rest of your week. Thanks for watching.